As you can see, I'm not a lawyer, I'm just an advisor, and this isn't legal advice. Every idea that becomes a business has many needs and wants. Aside from all the strategy and sales work you need to get ready for, you need to choose a legal structure and you should register your EIN. When you're about ready to go for it with your new startup business, and if your business will be located in the United States, here's the procedure. You contact the website for the Secretary of State of whatever state you want to form your business. On the state's website will be instructions for what you'll need to form your business entity. State requirements vary a bit, but here are some of the most common requirements. Name of your business. That's pretty straightforward. You need an original name. By the way, you're probably not allowed to call your technology business Google or your hamburger joint McDonald's. Their lawyers won't like that. Operating agreement. Some states require this and some don't. But your operating agreement has you describe who owns what in your business and who has certain responsibilities as well as rights to any profits. In a pinch, download an online sample from your state and base your operating agreement on that. Articles of organization. Here's where you list the business, its address in the state, as well as the key members of your startup. You also may need to state the purpose of the business, but that can be kept vague. For example, one entrepreneur's articles of organization said, "My business intended to engage in any lawful activity." Seriously. Registered agent. Some states require the name of a person who will be ready to receive legal documents in case you get sued. What, you're thinking? They require you to sign up to get sued even before you start your business? Yes, they do. Welcome to entrepreneurship in the litigious society, my friend. The lawyers write all the laws. Publication. Some states require a notice of the formation of your business to be published in specific journals. This is weird and a little bit costly in both your time and money, but still frequently a requirement of your state. EIN number. Your business's EIN comes from the federal government and stands for Employer Identification Number, and you will very likely need one even if you have no employees. Don't worry, getting an EIN is free and a matter of just a few minutes online. Everybody from here on out will want your EIN number, including especially any lenders, so you'll need one soon anyways. The EIN is like a social security number for your business and becomes a reference number for tax filing purposes every year. Fees. Speaking of tax filings, your state is probably going to charge you money for forming your business in the state and very likely will charge a fee every year thereafter. And that's about it. You should be able to do this for just a few $100s, maybe a bit more if you hire a lawyer to do it. So we've talked about the steps for forming a company with your state government, but that begs the question, what type of entity? To name a few of the most popular business types, you could form a corporation with two types, a C Corp or an S Corp. You could form a limited liability company known as an LLC. You could form a limited partnership or LP, or even a limited liability partnership or LLP. Limited liability companies, aka LLCs, are very flexible and typically very simple to administer. Many small businesses choose this option as it suits a wide variety of types and sizes. C corporations, aka C Corps, are less flexible than LLCs in terms of how the rights and responsibilities among different employees of the companies get administered, as well as how dividends get shared with owners. But C Corps, they can be more efficient in another way. Specifically, businesses that generate and then retain a lot of their profits tend to favor C Corp status. Another main difference between C Corps and LLCs is that C Corps pay taxes and enjoy a lower tax rate on income than people do. If you own an LLC, you end up paying taxes for any business profits as yourself, as an individual person, with no special tax rate for your business. If your business generates profits that will be distributed every year rather than retained, owners tend to want LLCs. Another type of corporation, the S Corp, acts kind of like a blend between C Corps and LLCs, in the sense that taxes are paid by the individual just like an LLC. S-corps, like C-corps, tend to have more restrictive administrative structures than LLCs. In addition, transferring ownership of the C-corps and S-corps may be easier than it is with LLCs. To round out your section on business types, limited liability partnerships, LLPs, tend to be formed by professionals who want to work together and manage their business together, such as a group of doctors or lawyers or accountants. Limited partnerships, LPs, tend to be formed for investment companies or real estate companies in which the suppliers of the money for investments don't actually work in the business. Finally, a word on sole proprietorships, also known as DBAs, doing business as. This formation is the simplest way to start a business. It is an unincorporated business owned and run by one individual, you. And there's really no differentiation between you and your business. You are one. The great thing about this structure is it's easy and cheap, but you as an individual are responsible for all of your business debts, losses, and liabilities, meaning you're fully exposed for the good and the bad. So, if you've started a business and are a DBA or sole proprietor, you may want to consider the options we've discussed in this video to give you and your business more structure and the opportunity to reduce your liabilities. Hopefully, this section on forming business entities helps you navigate your first few choices as you embark on this epic entrepreneurial journey. There's an absolute ton of information available out there for you as you get started. Most of it is just a few clicks away. Good luck.